In this video, we're going to answer a really common question. Just how much money do you need to start trading Forex? Hello, I'm David Jones from Capital.com, and we've done lots of videos on trading strategies, different markets, but a common question we haven't answered, I think, is how much money do you need to trade Forex? And it's a really important question, so I thought, well, let's do a short video on it. You need to come at this from a different angle. I think it can be a little bit like asking how long is a piece of string, but it's all to do with risk, and it's really critical if you're starting with a relatively small amount of money that your broker lets you trade small to keep your risk management at sensible levels. But I think the easiest way of explaining this, I'm going to go through a few points first of all, then I'll show you on the trading platform what I'm talking about, and hopefully from that you'll get an idea of just how much money you need personally if you want to start trading Forex. I think the right way to come at this is from a risk point of view. So let me just go through a couple of points. First of all, one of the biggest mistakes that new traders make is risking too much money on individual trades. This is just simple maths, of course. If you're risking, let's say, losing 20% of your account if you get stopped out of a trade, if you have 5 losing trades on the run, which from a probability point of view is completely possible, you're going to wipe your account out. So we need to think about a sensible approach to risk management, and most sensible approaches suggest not risking more than 3% of your account on any one trade idea. So what does this mean? If you have, for example, let's use a big number, £10,000 in your account. If any trade goes wrong and you're sticking to the no more than 3% of your account rule, then if any trade goes wrong, you should only lose 3% of your £10,000. In this example, £300. Okay, so this way you're having a relatively low level of financial risk on each trade, and if you have a series of losing trades, it's not going to do massive damage to your account. So you really need to think when you start trading, when it comes to how much money you're going to start with, what's the smallest my risk per trade could be. And the example, of course, if I have a £1,000 account, your risk on any one trade using this method should be £30. So what's key here is how small your broker lets you trade. So let's jump onto the trading platform. We'll look at some sample trades and the typical risk we'll be willing to take and what that means from a financial point of view. How much money would we need in our account? Let's take the euro US dollar as our example here. So I'm on the Capital.com platform. Let's say I'd like to buy it with a 50-point stop, and I'm going to do the smallest trade that Capital.com let me do. Let's set that up by clicking on buy. So if I click in the size box here, I can see that I can trade from as low as 1,000. Let's just set that up and type 1,000 into the trade size. And let's say I've decided that for this trade, a 50-point stop loss is the level of stop I want. So I'll choose close at loss, and I'll choose close if price goes down by 50 points. So here we go. So just to summarize here, I've got a 1,000 position on euro dollar. That's the smallest I can trade. My typical stop loss for euro US dollar may be 50 points from where I get in. So there's my stop. So in this example, my loss would be £3.83. So if I only want to risk 3% of my account, I need to have just over £100 in my account to do this trade. The actual number here is about £128. So 3.83 is 3% of £128. So I can start with a relatively small sum of money with Capital.com because I can trade small size and still keep that risk to a few percent of my account balance. Let's say I had £1,000 in my account and I only wanted to risk losing, again, 3% on any trading idea, and I want to trade euro US dollar with a 50-point stop loss. Let me just change the size. So I've bumped the size up here to 7,000, and you can see with a 50-point stop loss, it means I'd lose just under £27. So if I was trading with a £1,000 account, this example here shows how I can still stick to sensible risk management levels. I'm only risking, 2.7% of my account with a 50-point stop loss. So it's all about the risk. And with Capital.com, you can trade small. Let's take a look at another market. Let's take a look at the US Dow Jones Index. So on the left-hand side, we have an hourly chart of the Dow. Let's say I want to be a buyer, and I want my stop loss below the lows from a few hours ago. So maybe about 80 points away from where the market is trading now, down at this level. Let's set that up. So let's put the smallest size in first. The smallest size is 0.01. We'll choose that. Next, I'm going to close at a loss if the price goes down by, I'm going to choose 80 points here. So you can see that's a tiny level of risk here. If I trade the US 30 market, the Dow Jones, with an 80-point stop loss at the smallest I can trade, my level of risk is only 61 pence. So again, let's say I'm trading with £100 account. I want to keep my loss to 3% of my account on any one trade. I want to make this £3. Let me just bump my size up. So I've just pushed my size up to 0.05. So if I'm trading the Dow with an 80-point stop loss at 0.05, my risk, if I get stopped out, I'm going to lose just over £3. So it's very easy, even with small account sizes, to keep our risk to a sensible level as a percentage of the overall account on individual trades that we do. So you can see how critical it is when trading with smaller accounts that your broker lets you trade sort of micro size to make sure you're practicing sensible risk management. So I hope that makes it clear. It's all a question of risk. The big mistake, like I said there, that most people make is risking far too much on any one trading idea. If you're risking 20%, 30% of your account, you are going to have a run of losing trades, and the risk is you're going to blow your account up. But you can, if you have the right sort of broker, trade at a level where you're trading really small if you have a relatively small amount of money, but you're practicing sensible risk management. So even if you have a run of losing trades, it shouldn't damage your account too much. So how big you can trade is really important if you're starting off with maybe a few £100 to keep those risk management parameters at a sensible level. We'll start wrapping things up there. I should mention though, if you're a new trader, we have a promotion at the moment. If you go on our website to capital.com/David and you open an account from there, I'm doing 30 minutes one-on-one training via Skype on trading strategies and risk management. The details will be in the link down below. If you like the video, please click on the thumbs up. It helps us reach a wider audience. To never miss out on the content we produce, just make sure you're subscribed to the channel by clicking the subscribe button down there. And if you click the notification, the alarm bell icon, you'll get a message off YouTube every time we upload new content. But for this quick look at how much money you need to trade Forex, we'll leave things there. So from me, David Jones, and Capital.com, good luck with your trading.